What's up, guys? Welcome back. And if you're new, welcome. My name is Gene Johnson. I go by Genoj. And our show basically talks about buying and flipping real estate. We show our behind the scenes properties on, before and afters. And we also do educational videos on some of the stuff that has helped us become successful. And our goal is to share some of that same stuff with you guys. Just a little bit about myself. If you're new to the channel and don't know who I am, I've been a licensed broker for over 13 years. I've sold over 2,000 houses just as a realtor. I've bought and flipped hundreds of houses. I've built new construction homes. Currently, we're doing development deals where we're developing land and building subdivisions and building townhouses. And I have over 13 years of real estate experience. And so I want to be able to share and give back knowledge to you guys to help you guys, with your real estate investing career. In today's video, I'm going to talk about credit and why credit is so important and how you can use it in your business. But first, before I get into that, hit the like button below and definitely subscribe to the channel and leave questions and any comments, and we'll definitely get back to you. Also, I am not a financial advisor by any means. So, get with your CPA and an attorney, to get advice from them. I am simply sharing with you guys what has helped me, in my business. And so hopefully it can help you. So it's just my testimony and how I went through my journey. So let's just get into it. Credit is one of the most important things that you can have as a real estate investor. Because one, when you have good credit, you can qualify for better loans and better interest rate and lower down payment. So it definitely helps you, leverage your money better and keep more money in your pocket when you get those loans. Number two, if you're looking to build a rental portfolio, you definitely have to have decent to good credit, because once you renovate the property, you're going to refinance it and want to get your cash out. And so having that better credit or good credit is going to help you get the best possible rates on a loan. So the first tip would be to go to, Credit Karma. I use Credit Karma because it's free. I also have a paid subscription with my FICO. I like it. There are other places out there you can get your FICO score for free, but know what your scores are, and then know what things that are on your scores that are affecting your scores. So if you have like charge-offs, if you have unpaid collections, if you have things that are more than 30 and 60 and 90 days past due, all those things are affecting your credit. So in my opinion, what helped me was, one, getting rid of those little collections. In my case, I had some silly collections where I was in college. I got out of college, I had unpaid cell phone bills and cable bills that were $200, $300, $400, and I simply didn't agree with all the charges, so I didn't pay them, so they went on my credit. But those little small charges really affected me and hurt me a lot. So if you have collections, start working on disputing those collections and working on trying to come to an agreement with that collection company. Maybe you can get a percentage of what you owe knocked off, or get on a payment plan. But one, get those collections off your credit. That's going to be like one of the first things that you want to do. And this is not in any particular order. You can kind of do all of them simultaneously. So work on the collection. Number two is work on catching up all of your past due accounts and balances. Even if you were able to pay a small amount, the key is get it caught up. Because once it goes 30 days or 60 days or 90 days, when it goes late, it really impacts your score. You can have let's say a 650 credit, and you let one account go past due for 30 days and it's only $20. That could lower your score by 30, 40, 50, 60 points. And it's really going to hurt you, and it's going to take 3 to 6 months for you to recoup those points. So make sure you don't pay any bills late. If you have to set up a payment arrangement, pay the minimum balance, make sure all your bills are paid on time, and do not let them go past 30 days. Because once they go past 30 days, they report on your credit, and it really can hurt you. So not letting stuff go late, getting those collections paid down or paid off or settled, and then the third key I would say your debt to income ratio. Make sure you start to pay down your credit cards balances. They're going to be key. Not so much on installments. So if you have a auto loan and that's an installment loan, or you paying on it for a certain amount of time, by paying that off, that's probably not going to raise your credit score. But if you focus on your credit card balances and keeping those balances under 25%, that's really going to help your scores. The lower you can keep those balances, the more it's going to help your scores, because creditors want to see how responsible you are with using your credit. And if you have, let's say, 3 credit cards, they're all $1,000 a piece, and you're carrying $900 balances plus a month, you're going to be looked at as high risk. But if you had those same 3 credit cards where you had a $50 balance or a $100 balance, that's going to help impact your scores in a positive way, because you look responsible in terms of using your credit. This other little key is you're going to have personal credit cards, and then you can also get business credit cards. So one of the things I would say is looking to get an LLC, setting up a business for your real estate investing company, and get an EIN number and a bank account, and you can help build your business credit by using those. So let's just say you had no money or a little bit of money, but you had decent to good credit. One of the ways that you can leverage your credit to get cash would be by opening up business credit cards, because you can get business credit cards and they don't report to your personal credit, and they can help you come up with like a down payment to invest in real estate. Because a lot of cards, believe it or not, especially when you have good credit, you can get cards where it may be a 12-month introductory period where there's no interest, or it may even be 18 months where there's no interest. So with that being said, you can have 2 or 3 or 4 credit cards where you have a $5 or $10 or $15,000 credit limit, where you can take the cash off that card and not pay interest for a year, and use that money to be able to put down on your first investment. That would be a good way to leverage your credit without having to come up with the cash to get into your first real estate deal. That's definitely an option for you guys. So just in general, having good credit is going to be a really big key in determining your success in real estate, because you're going to have access to capital when you have good credit. One other thing I want to share with you guys, this is not a race by any means. Everybody's situation is going to be different. It may take you 6 months, it may take you a year, it may take you 2 years. But the importance is start now and start working on that stuff, because time goes by really quick. I mean, it's November 2020, and it seems like the year just started. So you have to start somewhere and start putting stuff in action. And in due time, everything will kind of come together. But just start. So if it looks like a daunting task where it's just going to take forever, it doesn't matter. Just start working on it now and start working towards it. So I hope this video was a good video, and you guys liked the video. Please leave comments, any questions you want to ask me. Until next time, guys, this is Genoj, and thanks again for watching.